Mrunmayee Jogalekar, who's Auto and FMCG Research Analyst at Asit C, Mehta Investment Intermediates. Mrunmayee, thanks so much for taking the time to speak to us this morning. Are you looking at this with a negative lens, and are you revising your view on Tata Motors downwards? What's the initial reaction?
So hi, good morning. Firstly, thank you for having me on your show. So to begin with, we do not assign a price target to this stock, but we do track it. But the update that has come in yesterday has definitely been negative for the company because JLR being the core business, or I would say rather the majority profit, majority of the profits of Tata Motors do come from JLR. So that's a key portion to track. Now, this revenue and the EBIT margin guidance that the company has given has definitely been muted. So flattish revenue for a second year in row, right? Because FY25 also we have seen that the revenue performance was flattish, and next year, FY26, the estimate is of a low single-digit decline at 28 billion pounds. The more negative news comes in at the EBIT margin front. So in FY25, the EBIT margin was 8.5%, and the target now is in a range of 5 to 7%. Now, a few key things that are impacting this are basically the tariff uncertainty coming from the US and China market, which is another key market, being muted. So if I just look back at the previous year, FY25, North America market contributed to 30% of the overall volumes. And that was the only market that has seen growth. All the other markets were either flattish or have seen YOY decline. And now this one market which was growing is now likely to be impacted because of the tariffs coming in. In the previous year, North America wholesales were to the tune of 130,000. With the new US-UK FTA, which is proposed to reduce the tariffs from the earlier proposed 25 to 10%. There's a cap of 100,000 units that can be exported using this lower tariff every year. So anyway, we are looking at a cap at the North America volumes, even if the US-UK FTA comes into play. But the other aspect of it is that the details of these FTA are still not known. So that is one overhang that will continue. On the other side, the China market, which is another key market, still continues to be under pressure. So overall, the operating environment for JLR for this year does not look very good.
Okay. In which case does this seem like, Mrunmayee, does this seem like a long drawn battle for the bulls of Tata Motors? Never mind what has happened to the tape. I know you don't give price targets, but you have a view on which direction the flavor or the sentiment of the stock might be, right? Is it a long drawn battle for the bulls?
I would say at least for the next few quarters, we may not see any positive trigger.
Few quarters, few quarters could mean lead up to a year or two as well, Mrunmayee.
I would say maybe at least 2 to 3 quarters, at least for this year, at least till some clarity emerges. Because if you see, issues are not just on the JLR side. Even the domestic business is not very, hunky-dory. Because if you see the growth on both PV and CV side, both have a muted trajectory for this year, and Tata Motors has been losing share. So while they have targets to improve their share over the next couple of years, the journey to that might take some time.
Hi Mrunmayee, Tamanna here, and great to speak with you. So, okay, that's the view on Tata Motors, but if I was to widen it to the PV pack, and now that it seems that this rare earth crisis might not be as bad as expected, though we've been reporting that there's 1 month inventory and there needs to be a deal cracked with China, how would you rank all the key players out there, Maruti, Hyundai, M&M, and of course the Tata Motors?
So purely from the perspective of how they have been performing in the kind of product lineup that they have, obviously M&M has been performing much ahead of the entire pack with, double-digit volume growth consistently backed by their new launches. So M&M is continued to still expected to still perform better than the pack. For Maruti, the key aspect would be, some kind of revival in the hatches segment. Exports are still doing well for Maruti, and that is one of their key growth drivers. So maybe towards the end of this year, we might see some kind of uptick to start happening for Maruti. So maybe not immediately. So H1 might still be muted, but maybe some gradual improvement from H2 onwards. For Hyundai, so recently they have commercialized their new capacity. So at least there's new capacity on board because that was a constraint that the company was facing. But then domestic volumes wise, it is still muted. We'll have to see H2 onwards, things might start to improve again for them a little bit.
Right. All right. Thanks so much, Mrunmayee, for joining us this morning. Pleasure speaking with you, and keep all of these stocks on your radar, specifically Tata Motors.